What's going on, 7 o'clock? As I hope everybody's doing very well. Let's go ahead and get started. And we are live. This is Travis with the Spoon from Carter Cow Capital. Carter Cow Trading. Trade with Travis on YouTube. Hope everybody's doing very well on this Thursday morning. This is the start of a new month, and this is the month where I think that it is winning season. I truly believe so. And let's start this month off right for us being able to take a look at some overall trading pairs. So I'm going to go ahead and go through the disclaimer, and then after that, we'll go ahead and get started. I'm not a CPA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand that Forex involves risk. That involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, I promise that you're going to end up making money today. So with that being said, show my face on the screen. I hope everybody's doing very well. Everybody out there, I can see that YouTube is working properly. I can see that Facebook is working properly. So hopefully everybody's doing very well when it comes down to that. And let's go ahead and get started for being able to take a look at some charts. Before we get started, make sure you drop in a like, drop in a comment so I can know exactly who you are. I see that we have a few people on live right now. Typically 7 o'clock is the earlier time, so we typically have it being recorded. But overall, very excited to be able to talk to each and every one of y'all. My question to y'all, for the people that are on live, how did y'all do last month when it came down to y'all trading? Actual being able to look at your charts and being able to get your reports and everything else like that. If you do not know what your numbers are, it's very important to be able to kind of get an idea about what that number actually was, because that'll allow you to be able to evaluate your overall trading. Last month, we ended up doing right around 1900 when it came down to that. The Flock app, what's going on? Hope everything's going well. If you want to see what we're doing live, go to Trade with Travis on YouTube, and you can be able to see our charts. We end up doing 1900. That is fully documented and everything else like that. Very excited when it comes down to that. Goal this month is to have no trade. Every trade that we end up taking, when it comes down to wins, we want to be able to get over $1,000 plus. We finally got the account to where we could be able to personally be able to do that on every trade that we end up taking. So every trade, my personal goal is to be able to make $1,000 on each and every trade for its profit. Obviously, anytime you put it out there in the universe, you go out there and go get it. And then after that, we'll see what happens. I got all the confidence in the world in myself and in my team and everybody else. And hopefully we can be able to get that done. All right, so here we go. So today, a little bit earlier, we ended up having some bad figures when it came down to the pounds, and some bad figures when it came down to the Eurozone for Italy and Germany. That drop off when it came down to the pound actually ended up dropping the pounds down to 129 again. Remember, the market was up right around 133, so that means that pretty much they had a 400 pip drop again. 2 weeks ago, it was right around 500 pips in a week. So Brexit is really kind of holding the pound in a bad position when it comes down to overall movement. So we have to keep that in mind. Today is a consolidation day. Typically, I would say either it's a trader's day or a fundamentals day. Today is a consolidation day in my mind. The only reason why I say that is because, remember, non-farm payrolls is going to end up coming out tomorrow. So people that are interested in being able to trade when it comes down to fundamental news are not going to trade based off of today's information. So the manufacturing PMIs really doesn't matter to me when it comes down to overall movement, because you're probably not going to see anything for its overall movement when it comes down to that overall move. Remember, we're looking at this and being able to get into the dollar at a low price again, so we can be able to ride this up all the way through October. I believe that the dollar is going to be strong in October for its overall movement. The denying of the stimulus check is not necessarily the greatest way to be able to start off the month, but overall, I do think that because of what's happening in November, I do think that the dollar is going to end up getting a little stronger. A little bit later on today, we're going to end up seeing the Euro Leaders Summits. And then after that, we're going to see retail sales from the Australian dollar. That should push it up to the 72 area, where we should have a good area to be able to sell. I am interested in being able to sell around that area. All right, so with that being said, let's take a look at the currency strength chart. If we look at what's happening right now, we can see that the pound is the weakest pair, and it's the weakest pair by a lot. We can see that the Swiss franc is actually the strongest pair right now currently, and we can see that the Australian dollar and New Zealand dollar are basically at a point to where they're starting to get a little bit stronger. The US dollar and the Japanese yen are weak, but they're not weak by as much compared to the pound. So obviously, if you're a pound, if you like to trade the pound when it comes down to overall movements, that will be a area to be able to pay attention to. Me personally, I don't look at the pound for it being able to trade. I just don't like the margin that is being held on my account. I can use that to be able to get better bang for my buck on different trades. So that's where we are when it comes down to that. Take a look at the big three. Now we take a look at it. U.S. dollar. The U.S. dollar is on its third day of overall retracement. Remember, we were talking about the market being in the sell zone. Typically, it takes right around 7 to 11 days of overall bearish movement before the market starts to push up to the top side. So what I'm expecting is that we should see another bearish day. We probably should see another bearish day again on Friday, depending on how the market plays, and then going into next week. That's when we should be able to start loading in when it comes down to our overall buys. We have to be able to find locations on where the market could be able to drop down to. So once we end up getting into that overall area, we could look for an overall trade. Now, previously, we end up having past resistance and it's done turned into future support, but we've broken down from that support. So now we need to look at lower levels of where this market could be able to fall to. It could possibly fall right back to support 11,969. If that does happen, then overall, I think that would be a solid trade to be able to take as long as the market breaks the trend line and as long as it does not break this overall orange long-term trend line that was created before. I'm going to keep this as being dotted because it is broken and the market is above that, and the market is considered to be bullish and it's going through an overall transition of movement. So we have to keep that in mind. I do not personally want to see that the U.S. dollar gets stronger today. I would rather see that the dollar ends up getting either slightly weaker or having slight indecision. By being able to have that, we can be able to see that the stochastic will probably get right around the 40 range, maybe right around the 30 range, depending on where it is. And typically, we've noticed that even though I set my stochastic in, seeing that this market has been turning around right around 30. So if a counter trend line break happens and it doesn't happen within the buy zone, obviously it's time to go. It is what it is, and we're going ahead and placing our trades from there. So keep that in mind. I ended up taking a look at oil. Actually ended up taking a sell on oil just a little bit earlier. We go back to what's happening on the daily. We can see that this market ended up going through a ascending triangle. Ended up having a breakout. Then after that, had a retest. From that retest of last week, the market ended up breaking down for a couple of days and retested again. And this is another basically rejection of that overall trend line. The only thing that I don't like about the trade that I ended up taking was that I ended up taking it at 50% of the overall stochastic to the downside. But in this case, beggars can't be choosers. You got a broken of a trend line, you got a retest, and you got a rejection. So that's the trade that you end up taking from the overall downside. We look at it from a 2-hour perspective. There goes our counter trend line break. I got in right around this overall area. I got in a little bit late, but I am in. Currently right now, I am up when it comes down to this movement. And you are looking at being able to get in on oil. If you do trade oil, I place my stop just above the overall 2-hour stop, which was at 40.50. For us being able to place in. So my stop was at 40.50. Can I make that so I can type that in so you can see it. And my take profit, I didn't place it all the way down to the daily D extension. I'm still trying to get a feel for oil on the actual broker that I'm using it at. Instead of going down to 31, where I think the market will probably end up falling to, I end up seeing that this market went to the deep 8.6, and with the market going to the deep 8.6 for its overall position, I end up saying, okay, well, instead of doing that, let's trade all the way down to the 2-hour D extension, which would be at 38.02. So I had it at 38.03. The Eli News Show. What's going on? Sorry, I stumbled all over that one. Jeez. So entry was based off of the counter trend line break. End up getting off right there. Take profit is at 38.03. That is the overall area where we're looking at being able to get out for your overall profit. Looking at risk versus reward on this one. We are solid when it comes down to risk versus reward. And once again, don't hesitate to be able to ask your questions. If you have questions or you want me to take a look at a chart while I'm actually going through this, you can. Typically, I can get through about 5 to 6 charts, sometimes even more, depending on how quick I'm able to get through. But take profit is 38.03 for this overall movement. 38.3. Currently, right now, we're looking at stop versus your entry point, which my entry point was right here. But if we're looking at risk versus reward, or where we're at right now. Let's take a look at that and let's calculate that real quick. That would be about 68 pips or 174. So basically a 1 to 3. And that's not bad when it comes down to risk versus reward. Anytime that you can be able to get a 1 to 3 for its risk versus reward, I think that you have a strong chance of being able to create an income. Now, this market ended up breaking out of a triangle to the upside, broke it to the downside again, which was expected. Now, I think that we're moving from here. Now, if you want to trade this long term, really want to go out there, a overall D extension, this market is expected to go down to 31.38 for its overall move. I'm looking at being able to get out of this on a 2-hour trade, allow the market to be able to bounce back up, and then trade it again to the downside if we can be able to get that. I think it's a solid position, and put in a significant entry when it came down to that because of the 1 to 3 risk reward ratio. But there goes a sale. That's a sale at market right now if you're interested in being able to trade. And we're going to move on to the downside. Now let's take a look at the NASDAQ 100. Typically don't talk about futures in here unless I end up taking a trade, but I do want to go ahead and talk about this trade that we ended up having yesterday. Ended up making $1,300 based off of this move yesterday. Very happy came down to that overall move. And anytime that you can be able to make 4 figures on any type of trade within about 40 minutes of overall time, that's always good. So here was the plan. We end up taking a look at this one on the daily. We end up seeing that this market broke a counter trend line break with a morning star, and it was expected to be able to fall up to, or expected to be able to go to the D extension on the daily, which was expected to be right around 16,074. Now, the problem with that was that it only retraced to 236, which means that it more than likely you'll probably end up seeing a little bit of resistance before getting to that number. So with that being said, what we end up doing was we end up taking a look at 2-hour trades and see if we can be able to find something towards the upside. If we can be able to get that, then we're good. My overall extension of this move was at 11,600. We end up catching it based off of this first counter trend line break towards the top side, and I didn't set my alert for the second break, and I missed it. And the market is moving up. Currently, the market is about 30 pips away from that overall move. I'm not going to risk it to be able to try to get in now, but I do think that the market could go up to 11,600, all the way up to 11,721 for its overall movement. If I get a 2-hour break on a fall, then maybe I might take that. But looking at this long wick that ended up happening from 49 all the way up to 561, not necessarily interested in being able to scalp it or anything else like that. I take my money and I run on that one, but happy with the profit. Wish I could have got this one a little bit more. I didn't turn on my alert. If I would have turned on my alert, obviously I would have been okay. But that's the reason why you have alerts, so you can be able to stay away from the computer and allow this to be able to work for you. And obviously I didn't do that yesterday, so it is what it is. If you're in this buy and you stayed into the 11,600 range where I ended up placing it out a little bit earlier, congratulations. You're about 30 pips away. For me, all the way through, this would have been a $3,000 trade. I got out during lunchtime yesterday when the market ended up having this huge wick and downside movement. I was looking for the counter trend line break. Just didn't pay attention to the overall move. It is what it is when it comes down to that. Making money on it, that's fine. So here we go. Let's go ahead and take a look at some of these U.S. pairs. In particular, the only pair that I'm somewhat interested in and being able to keep an eye out on is the U.S. yen. And the reason why I'm interested in the U.S. yen is because of a couple of reasons. One, if you look at the weekly is pointing toward the downside. If you look at the daily is pointing to the downside, and we're in the sell zone right now. So that means that we have a potential sale that we're looking at being able to get into. So initially, when I was looking at this, I wanted to get in at the point of control. What I mean by point of control is I want to be able to get in right around the 106 area. We could be able to get that, and I'm thinking about being able to place a pending sale in that area. But if I'm looking at how the market is basically reacting to this overall point, we see that we had 4 days of overall movement. We've had this market basically try to push up, and it has not been able to. With that being said, if we look at where this market could potentially go, yes, it could go up to 106, and there's a stop of on a daily move or a short fib. It's at 106.30 for the overall movement. So This one is right to be able to sell right now if you're interested in being able to get in. For me, because I don't, because I'm kind of worried about the overall position of where I'm at. I would love to be able to get in, but typically when I trade this, I like to trade a little bit stronger than what I'm getting ready to trade right now. But there's an evening star that's showing up right now. There's nothing I can be able to do about it. If I want to get in, this is the point to be able to get in. And if it goes up a little bit higher and we get stopped out, then obviously it is what it is when it comes down to that. So stop on this one. If we end up placing our stop at 106.60 for us the 2 hour. Let's go 106.60 for us the 2 hour. That'll be 107 pips. So you're gonna watch me do this live while we actually go through this. So this is our 5-star Forex money advisor. Basically, what we end up doing from here is basically manage our overall trades and kind of go from there. It is an R2 trade. The daily is down at R2. There's a broken counter trend line break right now that makes it an 80% trade. We do have a counter trend line break at this particular point. The stochastic is overbought and oversold, which makes it a 91% trade when it comes down to getting in on this overall trade. Now, I would love to be able to get in at 90. I would love to be able to get in at 105.94. So what I'm going to do is that when it comes down to my overall risk, instead of going 5% like I would typically do, I'm probably just going to go 4% on this overall trade because it is in an R2 position. So that means that I can be able to trade this with 4.3 mini lots based off of the overall stop. Take profit on this overall trade. If I'm trading this down based off of the 2 hour, that would be right around 102.42. If I'm trading this to the long-term D extension, that would be right around 99.02. Currently, right now, if I'm doing this, this would be right around 307 pips. I'm going to take that trade instead of trading all the way down to 99.02. So currently, right now, literally, what I'm getting ready to do is the people that are on Instagram, I'm getting ready to take a trade on my computer. So I'm going to pause y'all real quick and actually take a trade on the US yen as we speak. And we'll see how everything kind of plays out. This is the first trade of the month. Typically, I don't like taking trades right before non-farm payroll. I typically don't like doing that. But I don't know if I'm getting faked out on this one. The 2 hour is not in the sell zone as of yet, so the market could go a little bit higher. And if we look at point of control, if we can go to point of control real quick, and that may end up helping me out for the overall idea. This market has not broke a trend line yet on a 2 hour. There's an evening star. I agree that there's an evening star, but it's not a break as of yet. I'm trying to hold out and see if I can be able to get as high as the price I can. Let's go to the 15. 15 minutes below. We do have a counter trend line break, but we did this rest right on that 50-day moving average. I'm gonna hold out hope and see if I can get a higher number. I'm not gonna make that trade. Yeah, I'm gonna hold out hope and see if I can get a higher number when it comes down to that. I would love to be able to get in right now, but if I'm looking at this overall trade on the US yen, I know we're in the sell zone, and I know if I mess up on this one, then I'm gonna miss out on probably about 20 to 30 pips off of this one moving to the downside. But if I don't miss and I get a higher number, then that means that I get a higher rate of return when it comes down to it, and I can be able to raise up my stop loss a little bit more. The second thought process will end up being, if I do take the trade right now, then I could average in and be able to place another trade in at 106 if it does hit that level. So that's what I'm kind of stuck at on this one. 15-minute, we do have a counter trend line break on this overall move. I'm going to take it. All right, so here we go. First trade, the first trade of the month. US yen, we're getting ready to take a sale. New order. We're going to end up going 4 micro lots on this one. It has 4.3. Getting ready to take a sale right now. Locked in. I just got 105.50 as my overall sale entry. Stop loss on this overall trade is going to end up being 106.60 for the overall stop loss. $106.60. Take profit on this one. The market has been failing to drop below 104. So if it does drop below 104, it's going to fall with force. I'm going to say 102.43 for the first move. You can make an argument that this market could move all the way down to 101 without necessarily having too much of a problem, or being able to get down to that level. So we are going to pay attention to. Let's see, we back live. We are going to pay attention down to seeing how this market's going to move off the daily. Let me take a look at it off the daily again. We do have a counter trend line break. The market's in the sell zone. This is about, if the market pushes up to 106, then I take the trade again at 106. The market keeps on falling down to this area. The daily D extension off of this one would be at 102.60. So that's based off of a sub fib. Based off of the long-term move, it's at 101.70, 101.71. I want to take a look at point of control again. Let's go to the daily. Take a look at that overall position. Make sure that we get an accurate take profit number. Go to the daily. Oh no. We've been paying attention to this sale for a while now, and 101 is an area where I think that the market could fall, not have that much hesitation. If this market does break down from this area, based off of looking at overall price action since early 2015, this market will, if it breaks 105, it's going to fall to 102 very easily. If it breaks 102, then it will go down to 101. It will have some hesitation right around the 102 area, and then after that, break down to 101. The question is, will it get to the long-term crown D extension at 99? That is yet to be seen. So I'm going to keep 102. Yeah, I'm going to keep 102 as the overall number for right now. I'll reevaluate it and see if I can be able to get it down to the downside from there. Carolina King, what's going on? Hope everything's going well with you, Reggie. And we'll go from there. So there we are. First trade of the month. Well, second trade of the month, because we got into oil a little bit earlier. So we are in oil. We are in the U.S. yen. And we'll see how this market kind of plays off. I am looking at being able to possibly get back in on the U.S. yen for selling again a little bit later on at 106 if the market does pop up. So that's the overall spot if it does happen from there. Let's take a look at the U.S. CAD. We should be able to get through some of these pretty quickly. Market is in the sell zone. Market is expected to be able to fall. We are looking at this market starting to take a little bit of a dive to the downside. Once that happens, I am interested in being able to buy. I'm not interested in selling right now. If the market does go down, it will go down without me, and I'm looking for a low price to be able to buy to the upside. The overall expectation is that the market will go up to 135 at some point. So as long as this market keeps on going down and allow me to be able to get in right around the 132 area, then that means that you're talking about 380 pips of overall upside movement if we can be able to get that, which I'm totally fine with being able to take from that overall movement. So that's what I'm currently waiting on right now at this particular point. Give me 1 second. I did do this off the right account. Okay, I did. All right. All right. Okay. So I'm just making sure I did it off the right account because I'm not seeing it trigger with my account right here. So that is the first trade. U.S. CAD, not interested in being able to do anything with it yet. We see that oil is going down, which means that the U.S. dollar should actually start to get a little bit stronger. I mean, oil should start to get a little bit weaker, but it's going against the grain right now. So kind of figuring out what's happening with that. Euro, United States dollar. Remember, market never hit the D extension at 1.1593. Since then, subsequently, the market has been pushing up. We end up making a buy on that overall trade on our automated system. Made some money off of that yesterday, and quite frankly, we're just kind of waiting on some other positions to be able to turn the system back on. If we're looking at this market basically rise up, currently it's at 37%. The last few times that the market has failed, it has not fallen without well, it's failed in the no trade zone. So we have to keep that in mind when it comes down to movement. We are seeing a little bit of divergence where the market is making higher highs and higher lows. So it may end up getting up to the sell zone on this one. If that does happen, then after that, we'll look at being able to sell it to the downside and then trade from there. I expect that the market will go down to 1.14 at some point, possibly down to 1.12 at some point. But we have to see how everything is going to end up playing out with the Eurozone, because I think the dollar is going to end up starting to be strong in October. We just have to see how weak the Eurozone is going to actually end up being, and see how much that's going to end up forcing the move. We look at the U.S. Swiss franc. U.S. Swiss franc has finally ended up taking that dive to the downside since breaking past 93 or touching at 93. That was expected that the market was going to hit 93. Currently, right now, what we're looking for is a low price. As long as the market does not break the overall trend line to the downside and give us a area to where we can be able to buy right around the 91.50 area to the 91 area, then I'm very interested in being able to buy on that position. Currently, the market is at 60% on this overall trade to the downside. So it's in a no trade zone, but we are looking at being able to buy overall. And currently, I do like that overall trade. Australian dollar, United States dollar, market is in the buy zone. Well, market is leaving from the buy zone. We've had 4 days of overall bullish movement since that 380 pips of overall retracement. I would love to be able to get in on this trade anywhere around the 72 area and being able to sell. We can get it up towards the 72.80 area, then it would be perfect. But anywhere around the 72 area, in which the market is at 71.94 right now, I would love to be able to sell on this overall position. Currently, right now, what I would wait for if I'm looking at anything on this overall move is that I will wait for the market to get into the sell zone and then have a counter trend line break. Once you get that, then it'll be a better trade to be able to take overall. But for right now, the market is at 71.95. I am done buying on that overall pair. I was done looking at buying on that overall pair. I am currently looking at trying to find a sale, but I want to find a sale at a high price with a 2-hour break with a 2-hour break or a 15-minute break to be a little bit more accurate to the downside on this overall move, if that makes sense. Last pair that we're going to end up taking a look at today, because we have 2 minutes left, is that I'm going to take a look at the New Zealand dollar. Take a look at the New Zealand dollar, United States dollar. We can see that this market is doing the same thing as the Australian dollar. Typically, the Australian dollar and New Zealand dollar typically move at the same rate. So this market is at 66.40. It is in the R6 area, which means that it's in a no trade area for us being able to buy. But for us being able to sell, I see that this market has a little bit of resistance towards the 6,700 area. I would love to see that this market gets towards the 6,700 area and give us a chance to be able to sell right around that area. Obviously, we'll want to be able to sell that all the way down to the 6,200 area, which means that that's 500 pips overall movement. Now, remember, on the weekly, this market has broken, or this market is in the sell zone on the weekly, or leaving from the sell zone and basically in the middle of the sell zone at this particular point. Going toward the downside, I do expect that this market will end up going to 6,200. And I think it will go with relative ease once it ends up breaking a few levels. Once it ends up breaking, if we go to point of control, okay, so the first point of control that it has to be able to break will have to be 6,500. If it breaks 6,500, then it's good. Then it will fall down to right around 64. Anything below 64, then I think it will fall at a rapid succession. So we have to be able to keep that in mind when it comes down to this market basically dropping and being able to go from there. If we're able to get that, then we're good to go. Overall, this market is still considered to be bullish because it's above the 377 and 144 moving average for the weekly. But we are interested in being able to sell it from there. Now, you like what we end up doing, please make sure that you like the Carter Capital business page on Facebook. Make sure that you end up liking the overall live stream that we have on YouTube with Trade with Travis, and the live stream that we have with Trade with Travis on Facebook. I do appreciate each and every one of y'all's time. Obviously, we have 2 trades that we're looking at right now that we're currently in. Good safe risk reward when it comes down to the overall trade. Obviously, we got non-farm payroll that's going to end up happening tomorrow. I typically don't like taking trades before non-farm payroll, but this is the only one that ended up giving us, well, this is the only one that is set up in a position to where it makes sense being able to trade it. And if we go back to what happened last week, The only pair that was strong against the U.S. dollar last week when the U.S. dollar was making its move was the Japanese yen. So what we might end up seeing is the U.S. dollar gets stronger against every pair aside from the Japanese yen. Japanese yen just makes its move against the U.S. dollar. So if that happens, kind of like what happened last week, then we have to keep that in mind. That also means that we need to keep our eye out on Japanese pairs, kind of like the Australian yen and kind of like the more like the Australian yen and more like the New Zealand dollar Japanese. We get both of those, then I think that we end up getting great value as well. Like always, believe in yourself and change will end up coming. Like always, plan your trade your plan. Everyone, y'all end up having a good one. Remember, non-farm payrolls Friday. Typically, we don't take trades, but we will pay attention to the position.